We're going to talk about three things today. We're going to cover interest rates, then move into inventory, which is one of the most significant issues in real estate today. And then we're going to talk a little bit about the headlines that we're seeing right now that may be factually correct, but misleads consumers in a lot of ways. So we're going to be cleaning that up a bit. And as always, I want to thank you for tuning in. Welcome to Real Estate with Redbeard. Hi, I'm Stephen Redbeard Verts, largest beard in real estate and owner-operator of Wizards Real Estate. This is the February 2023 market update. If you like this kind of information, be sure to like, share, and follow, as I will be sharing informative videos about the real estate market, as well as those home selling and home buying tips. We're going to cover several things that I think are very, very important in the market right now. We're seeing a lot of movement. Sometimes movement in things in a normal market might take those 3 to 6 months. And right now they're happening inside a week, 72 hours, 2 days, maybe even just a day. So everything is very fast paced. We're going to break this movement down. We live in a day and time where there's more information, there's more data, there's more research available to us than there ever has been before, and yet people are confused. My hope is that over the next few minutes I can present this information where it's easy enough to understand, because no matter where you turn in the news or even in our own business, there's so many people talking about what's happening, and then people look at it and they go, okay, I'm confused. I'm not exactly sure what's happening, and I want to break that down for you, and this is kind of where I would start. Mortgage rates are turning downward. We can say that confidently. We're in this downward trending movement where the average interest rates peaked around that first half of November. And so for the last 90 days, we've actually almost saw this percentage point drop in price. Ali Wolf from Zonda stated, I wonder if some consumers have worked through the 5 stages of grief of higher mortgage rates. Certainly last year, we knew that rates started to rise and it slammed the brakes on for a lot of people. And I'm not convinced that that's the only thing. It wasn't just the interest rates that did it. It was a combination of the rapid rise in rate and the rapid rise in price together. Now we're here in the second month of the year, and consumers are like, okay, we're starting to understand this, and we're starting to actually get this. As there comes a little bit of relief in rates, we'll see more demand. If something's priced right in this market, it's going to sell quickly, and there's a lot of those stories of multiple offers coming back now. Now, I don't think we're heading back in the market of COVID where there was this frenzy and we're all stuck in this twilight zone market. I do think consumers are adjusting to the fact that interest rates have made it more expensive to buy a home nowadays. When we think about the 30-year fixed rate, 7 to 7.5% is going to bring a weak buyer demand, and we certainly saw that over the summer. 6.5 to 7%, and there becomes this limited buyer demand. 6 to 6.5, we're getting back into good buyer demand. Once we break through any threshold that's in the high 5s, we see strong buyer demand come back into the market. We've actually seen good buyer demand start to come back in the market right now. We're headed back into a time between good and strong buyer demand based on where interest rates are trending. If we go back and graph that, you can see that we're already there. As we get more good information about the economy, about inflation, and those type of things, we should expect that trend to continue. The biggest issue, though, I believe, is that we're going to be facing a spring market where it's not an interest rate issue, because that's quickly becoming a non-issue, but the real issue that we face is the fact that new listings are now below previous years. And I want to break that down for a moment, and we'll spend a little time on it, because if you look at the red line here, that's new listings coming to the market in 2022. And so we start out the new year listings coming and starting to almost eclipse where we had been in previous years. And this created the idea in many people's heads that a market crash was going to happen. We thought that since price is always determined by supply and demand, and that more listings would hit the market with less buyer demand due to inflation and other factors, that the market would come crashing down. We all know that they were wrong, but that was their case. In actuality, here's what happened. New listings started to fall, and we brought new listings to the market at a slower rate than 2017 to 2021, and we know that's what kept upward pressure on prices. There's not a market across this country where we're hearing anyone say, we have plenty of homes for the number of people that want to buy them. You can look at January where we finished up new listings, and we're at a lower level than we saw in 2020 and 2021. We're not bringing the listings to market that we need right now. Now, there are several reasons for that. Many people have an interest rate that they want to keep, and others mention that we don't want to put our house on the market because we're not even sure where we're going to go. Now, that also points out to this inventory issue that we face. Sellers need to keep in mind that there's more equity in homes today than ever before, especially if they've owned their home for 3 or more years. So one of the real questions becomes, what are you going to do with your home equity? Articles come out and talk about people that maybe bought during the pandemic and have buyer's remorse. Now, I'm going to say that I don't believe that that's a significant issue in the market. I think anybody that buys a home at any time might eventually think, oh, we would do something different. We wish we had more space, maybe a better kitchen, a better layout, bigger yard, whatever it might be. If you are a homeowner, let me know in the comments on how the home that you currently have is working out for you. It's always great to collect this data for future articles and for any future videos. Mike Simonson from Alto says, I'm looking at the latest housing data and I see surprising demand indicators, including home price resiliency and supply staying restricted. What we just talked about, restricted inventory. Who would have guessed that? Well, I think a lot of us in the business would have guessed that. We would have said, you know what? If you look at what's happening, the dynamics in the market, we're not seeing a flood of inventory. We're not seeing a flood of foreclosures. And yes, that is keeping upward pressure on prices. Home price resiliency, he's calling it here. And there are demand indicators as we start to move into that. If you think about that red to green image that I showed you, we're moving back into good to strong indicators relative to the health of the market and going into this spring market. The health in the spring market will be determined by the number of homes that we have to sell. We can't sell what we don't have, but here's what becomes very, very clear, and I want to spend just a minute on this. We are no doubt in the turn of the real estate market. Most experts would say it started about the middle of last year, it'll run to the middle of this year. We are in February, maybe right through the middle of the turn. Big banks are starting to revise all their forecasts. This is a look from Goldman Sachs. On January 10th, they said, we believe real estate in this country is going to lose a little bit over 6% in value, 6.1% depreciation in the coming year. Well, on the 24th of January, they went back quickly and they updated that to a negative 2.6%. Price is always determined by supply and demand. And oh, by the way, you're starting to see banks and forecasters start to say that, so be on the lookout for that. Many of them said last year that it's going to be disastrous, and they're saying, no, maybe it's not going to be as bad as what they thought. Maybe we were wrong about our earlier forecast, and be on the lookout for that because you're going to start to see that in the news and everywhere else. The question that I'd like to put on the table is, have home values hit bottom? If you look at this from every tracker that we look at, Case-Shiller, FHFA, Black Knight, CoreLogic, you see right here that the peak in depreciation happens sometime around August, sometime in the fall. Now these numbers are cumulative, but we've seen less depreciation than what we saw in August. When we look nationally at home prices, we can confidently say that they're not in a free fall. Be aware of the news media outlets, as headlines do more to terrify than they do clarify. Anytime we see something in the media that can be confusing or hard to understand, we want to make sure that we're bringing you the education you need so you do understand what's really happening out there, because a lot of the media headlines can make people pause their plans. So I'm going to start with this stat right here from a recent survey from NerdWallet. 2 out of every 3 people actually think that a housing market crash is coming. That's not really new though, as I had to shut that thought down many times over the past 3-4 years. Now if you follow along with us, you know that the data says differently, but why do people actually think this? It's because there's so much confusion out there around us, and a lot of it stems from the misleading headlines that we all see every single day. So we pulled these headlines about foreclosure data recently, and it says, U.S. foreclosure filings surged 115% in 2022, and then U.S. foreclosure activity doubles annually but still below pre-pandemic levels. And after that, foreclosure listings rose 115% in the past year. Now, while all these are factually true, they don't tell the whole story, but they get people to read the articles and read the information because these headlines are alarming. So take a look here. This is a quote from Adam, a very trusted source that we follow. It says, Adam, a leading curator of real estate data nationwide for land and property data today, released its year-end 2022 U.S. foreclosure market report, which shows foreclosure filings, default notices, scheduled auctions, and bank repossessions were reported on 324,237 U.S. properties in 2022. Now, that's up 150% from 2021, so that's what you saw in those headlines. But it's actually 34% down from 2019 before the pandemic shook up the market, and that's what you didn't see in those headlines. Are you following what I'm saying? Foreclosure filings in 2022 were also down 89% from a peak of nearly 2.9 million in 2010. You can see that a lot of media headlines will go right into this statistic that grabs the most attention, which is where they say it is up 115%. That is taken out of context out of the bigger picture. This next graph will help to visually break this down. This is a look at U.S. properties with foreclosure filings, and it's going all the way back to 2005. What you can see in those dark red bars is those were years where we had over 1 million foreclosure filings. Now, if you think about this and you look at the data of how much foreclosures have increased over the past year, that's what where the 115% comes from. But let's look over at the right-hand side. We went from nearly record level lows of foreclosures in 2020 and 2021 to up to 2022. That's the 115% increase. And more than double, no doubt. We said this was coming, but at the same time, if you look back in time as to what this actually means, contextually, 324,000 foreclosures is nowhere near the millions and millions that were recorded when the housing market crashed in this country. So we're in a very different period of time, a very different landscape for what's happening in the housing market, where we're going to break all those reasons why we're in a different place today. But it is important to have context as you look at the headlines to truly understand what they mean, because in 2010 there were 2.9 million foreclosure filings. Since then, buyers have been more qualified with better credit histories, income qualifications, that type of stuff in order to get their loans. We were also in a strong buyer's market back then with a large amount of houses to choose from before and during that crash. People look back in time and remember the foreclosures rising before the crash, and they think, here we go again. But the data does look very different. And so let's zoom in a little bit more at the past few years. So we actually had 1 million fewer foreclosures over the last 3 years than we did even compared to normal years. Data from Adams shows that in 2017, 18, and 19, we averaged just under 600,000 foreclosure filings. Now, we never want anyone to go through the foreclosure process by any means, but what we do know is that it happens every year in this country. Unfortunate financial situations, family situations, different things can happen and people have to go through the foreclosure process. Now, if you look at the last 3 years, we had a very different scenario. We had the forbearance program, we had higher equity in people's houses so they could sell homes quickly and avoid foreclosure. Banks and lenders also did what they could just so we didn't end up into a foreclosure crisis again. And so over the past 3 years, we had record low foreclosures, so we're not even anywhere near even a normal year when it comes to foreclosure filings. Now, our hearts go out to 324,000 people who last year had to go through the process. What we're not talking about here is epic proportions where we have a housing market crash. Many people think crash when they hear foreclosures rising, but what the data shows contextually is that we're in a very different place today, so let's talk a little bit more about why that is. Here's a quote from Rick Sharga where he says, 18 months after the end of the government's foreclosure moratorium, and with less than 5% of the 8.4 million borrowers who entered the CARES Act forbearance program remaining, foreclosure activity remains significantly lower than it did prior to COVID-19. It seems clear that the government and mortgage industry efforts during the pandemic, coupled with a strong economy, has helped prevent millions of unnecessary foreclosures. We're talking about a very different experience. The forbearance program gave people time and space when they needed to get back on their feet. The mortgage industry is doing everything they can also do with the homeowners to keep them in their homes. Also, the equity that people have built up over time has given them the opportunity to sell their home versus go through the foreclosure process. And I think that this quote from Bill McBride says it very well. The bottom line is there will be an increase in foreclosures over the next year from record low levels, but there will be not a huge wave of distressed sales as happened following the housing bubble. The distressed sales during the housing bust led to cascading price declines, and that will not happen this time. So it is really, really important to have this context to understand why this is different and that we're not heading for a crash. The data just doesn't support it. History does not support that, and I hope that these truths and clarity have brought you some insight so you don't have to wallow in fear and uncertainty about the market, and you don't put your plans on hold just based on these things. I bring you the facts, the data, and the insights so you can truly see what is actually happening out there. I hope you enjoyed our monthly market report this month. It's always a pleasure to be here with you, and I hope you found this information helpful. As always, we're grateful for you watching. We're grateful for you investing this time and understanding what this market shift entails. Be the informed buyer or seller in this market. And be sure to follow me on the socials, as I have plenty more videos coming your way. Until next time, my friends, Redbeard out.